Good evening, good evening. Anyone have a problem? Somebody just asked if there was a class today. Uh, did anybody have a hard time getting in? I'm just gonna take a quick peek to make sure I'm pretty sure I started the right meeting. There's Sandra now. Sandra, okay, she made it. Sorry about the delay. Happy Thanksgiving week, everybody. Maybe not necessarily those of you in Australia, but hey, never a bad time to give thanks. Am I right? We're going to give it just a minute. Hi, Perry. Good to see you. Welcome out. We've got Paul. Welcome, Paul. Got some coming in. We're going to give it a minute or two. You should know. Do you see my screen? I believe you see my screen. We are at the tail end as we wait. This is my little my notes on the rotations, although I'm gonna have to change because we're gonna do an options class. So we're gonna change this to be January the 2nd is gonna be the start of the second round of foundations. And we're gonna do it, but our final lineup, post-trade assessments today, that's happening right now. Thanksgiving, no session. Case studies. What is that? I'm going to bring a few trades that I've, right? A bullish trade of this is what it looked like, right? And I'll show you some, right? Well, so we're going to do just kind of a bull trade and a bear trade case study. I think that'll be good. We'll talk about picking an option. We'll talk about, it'll be, I think you'll like that one. No slide, well, there will be slides. That's a lie. I'm going to create some charts that'll make it so we can look at it easier. So case studies, and then next Thursday is just a Q&A wrap up. Where you can, have any lingering questions. So very exciting stuff. And then we jump into options. So I hope you're ready for that. All right, we've given everyone plenty of time. Welcome to the Market Watch group. Trading foundations. Is this a bad time? We get a ton of people watching the videos and then not as many live. So maybe what I'll do is send out a foundations course email where I ask like days and times, 2 days a week. Well, actually, no, Tuesdays and Thursdays will be the day, but maybe we'll look at alternative times. Look for that. Let me know if you think that. Let's dive in. Today we are talking about post-trade assessments. One of my most favorites. They're all my most favorites. Every one of these presentations is like a child, and I love them all dearly. This one is critical to me. The premise behind it. I used to do a lot of live presentations, workshops. I'd be at hotels and we'd have a couple hundred people, and I'd be up there. I have to wear my suit. My kids would always laugh because they're like, "We haven't seen you in a suit in a long." They were probably like, this was like 2004 to 2009, maybe. So I don't know how old they were. 3 to 5, 3 to 7. They're both adults now. But I would, 8 hours, big workshop, a lot of people. Sometimes would be hard to keep people's attention. So I'd always try to, keep it light, tell jokes. And the way I would start the presentation was, you guys are very lucky to have me as your instructor today. And here's why. I never lose money in the market. Still true to this day. Never lose money in the market. You might be thinking, "Oh, Scott, you lying son of a gun." But it's true. I either make money or I pay for information. Boom, boom, boom. That's my joke. You like it? No. So how do I make sure I joke, but at the same time I don't? I try to learn from every single trade. And that's what we're talking about today. Every trade. We can do better. We can get better. We believe in a Kaizen mentality, philosophy, modus operandi, which means what? Constant improvement. Okay, well, I don't want to just be like, yes, I believe in Kaizen. I'm so cool. How do we put actions into play that demonstrate we are committed to the principle of constant improvement? We're doing it every step of the way in this group. Step one, standardize the process. Develop your trading plan. All 8 sections, standardize it, because if it's not standardized, you can't measure it. And if you can't measure it, you can't improve it. That's a big part of what we're doing here. So what we're doing is we're saying that if we've standardized, now we can break a trade down, every single aspect of it. And that's what we're going to talk about. What are the aspects that we break down? How do we break it down? So that we can learn about something. Somewhere in there, there's information for you that can be assimilated. Finding patterns, finding observations that can be assimilated, processed. And then all of a sudden there's some improvement, and then a little bit more improvement, and then a little bit more improvement. And then all of a sudden, you look back and you're like, oh my goodness. I live in Utah. There's some amazing landscape in Utah. Mountains around where I am, lakes, snow, desert, right? We have the Red Rock country down south. There's a place, it's near Arches, right? Where it's Red Rock country, called Moab, Utah. It's a mecca for people who ride bikes and off-road Jeeps and stuff, because the traction, right? The rock gets hot. It almost melts the rubber a little bit. And the traction you get is amazing. And you'll all of a sudden be leaning over your bike and you're climbing up, and it's like you can barely stay on top. And then you look back down on what you climbed up and you're like, oh my gosh, I just climbed that. That's what we're doing here. You're going to do this. You're going to look back behind you. You're going to be like, I just did that. Yes, let's do it. Let's dive in. My name is Scott. I'll be your host. That was a long intro. I get you. You're like, it's a little long, Scott. Okay. Feedback accepted. What is our agenda today? Trade overview, right? How did we do? Then we're going to go through the components. We're going to look at our pre-trade assessment. If you remember, we had a presentation for the Trading Foundations course about the stages of a trade. Stage 1 is pre-trade. So we're going to evaluate. How did you do? Did you do everything you were supposed to? Did everything make sense? Did you follow your rules? And you're going to assess yourself, right? Same thing. You're going to look at what were the market conditions? What was the market doing at the time? Now that I can look back in hindsight, and you might think, well, Scott, that's not helpful. Hindsight bias. It is helpful if we can correlate what the market did relative to what we thought it was going to do. So wouldn't it be amazing? God, it would be so great if we just had a record of our market observations at that time. Wouldn't it be? Oh, wait, we do. Of course we do. We keep a log of our market posture. We can see what we thought leading up to that period of time. We can see what was happening during that period of time, and immediately we can make that correlation. If you can't make that correlation, you lose that dimension of post-trade assessment, which is a huge one. I promise you, probably the most important one for many, many people. They're like, what did I do wrong? Well, the market was shit and you traded it anyways. Pardon my French. It's Thanksgiving week. The market was terrible and you're just smashing your way through it. I'm a trader. I'm going to trade. Yeah. No. No. Market's going well, showing signs. Great. Have a go. Market's showing like some concerns. Relax. Take a breath. Get a drink of water. We got to have the ability to correlate that. Rule adherence. Did you follow your rules? Oh, I promise you this. Here's an exercise I do. I haven't done it for a while. I probably should. Go back and look at 2 or 3 trades that I flagged as having broken a rule. And I flagged it, probably at the time I flagged it because it probably hurt. Right? It probably hurt. So I want to flag it so I make note of it. Well, then at the end of the year, I'll take like the 3 worst times that I didn't adhere to my rules, and I'll look at what it cost me. Whether it cost me, I've had times where it was a profitable trade and I made 2x and I should have made 8x. I lost a full loss and I should have only lost half a loss. And I add up and I look at what would my account have been? How much better would it be? It's pretty nasty. You're like, wow, I would have made 5% more money this year without those 3 mistakes. 3 mistakes, 5% better returns for the year. It will astound you and somewhat, make you a little sick to your stomach, but super helpful. I love it. Sandra says trying to force the markets is like a mosquito fighting a bulldozer. You know my analogy, you blade of grass. Right? We cannot impose our will on the lawnmower. Stand up when you can, duck when you need to. That's how we trade. Risk management. How did you do with your position sizing, your stops? What have I done? Your stops, your targets, your adjustments. What lessons then? Oh no, sorry. Risk management leads to overall trade assessment. All right, let's score things. You can do it however you want. You can do each one. You have a trade overview. Then you score your pre-trade assessment. Score from 1 to 5, 1 to 10, 5 stars, whatever you want it to be. You score those. Then you kind of do a composite in your overall trade assessment. Then you talk about what lessons you learned. And then we think about the aggregations for adjustments. How do we keep getting better and better and better? Do I have to do this on every trade? Of course not. Sometimes I will just, these days, I just will pick, randomly pick. I pretty much do it for most, if not all, losses. When I say randomly picking winners. I'll pick a few winners. I want to learn from the winners too. So all losers, some winners. A trader put it great one time. He said, I never learned anything making money. Or another way to put it, experience is what you get when you didn't get what you wanted. Yeah? Okay. That's our agenda. Let's get into it. Ask questions as they come. Make comments, whatever you need to do. Trade overview, trade details. We already do this, or you should be. Your trade log. We have a market posture log. We have a trade log. We have a trading plan. Everything is written. Everything is standardized. And that way it can become stronger and stronger. Date of the trade, the symbol, the trade, the entry, the exit, the position size. Right. We also can put notes in there. Just the log. Log your trades. Do it. Stay consistent. It should be in your routines on a daily basis, on a weekly basis. Your log should be strong. You should be learning from your analytics. A lot of data when we do it right for us to be learning from and improving from. Okay, let's talk about the actual assessment. So that's just logging, right? That's just entering the numbers. It's not really an assessment. We don't assess that way. There, we're creating an aggregation of our data, and we do analysis of trades 25 at a time and look for patterns in our winners and our losers and our percentages. And based on those patterns, we look for ways to make improvements. Here, we're taking each trade individually and saying, okay, let's break this down into these components, starting with pre-trade assessment. Pre-trade assessment. The pre-trade assessment is broken down into 2 components. Number 1 is technical analysis. Technical analysis meaning a summary of the key technical indicators considered. What were the critical technical indicators analyzed before entering the trade? I tend to use candlesticks. I tend to use support and resistance. I tend to use a slow stochastics 7-3. I look at volume. Those are the things that I would be looking at. Other people may look at different things, right? So you need to know, what are your key technical indicators? What insight did they provide to you? Were they in place? Did you wait for your rules? We'll talk about rules, but just simply, right? Did you do a comprehensive and thorough review of the indicators? Were there patterns or trends? Was there a pattern, a flag, a wedge, head and shoulders, something that made it more significant, right? What did you think there was? What did it actually become? The other side of it is the reward to risk ratio. We need to calculate the reward to risk ratio before the trade. We need to understand what was the risk. We know it's an essential metric that evaluates our potential gain against the associated risk. Did it meet the rules? What was your justification behind it? Did you say, hey, normally I'm looking for 2.5, but my conditions were good. I wanted another trade. I put it on even though it was 2-1. Was there a reasoning, a strategic consideration, or some principle applied to that trade? Those are the things we want to make notes of. Those are the things that we want to assess ourselves on and say, how did I do? 4 out of 5, 4.5 out of 5, 5 out of 5. If you look at it and you're like, man, I can only give myself 3 out of 5. Yeah, that's a problem, right? Anything less than 4 is a problem. 4 to 4.5, you should be like, okay, I should still look to improve. Find a way to benchmark this so you can score yourself. Because like we said, we're going to talk about that some more. If you can't score it, you can't improve it. We got to be able to measure it, even if it's a subjective measurement. All right, pre-trade assessment. Market conditions. We need to do an analysis of the market conditions. What were the major market characteristics and performance at the time? You need to examine what they were doing. How? Okay, go back. Go to the SPY. Isolate a 6-month chart prior to the trade so you can see what was going on before. Then you can see what was going on during, into the trade, and you can kind of say to yourself, oh, okay, this is what happened. And you might be like, well, what's that going to help me, Scott? Yeah, the market crapped out. Great. If the market crapped out and hurt your trade and a bunch of other trades, then you can look at your current posture going into the trade. Did you see it coming? Did you or not? If you didn't see it coming, that means you need to assess your routine. What did you miss? What gave signals? Then you would go through each component. Did it break support and you didn't notice it or didn't score it quickly enough? Did it change the long-term trend and you didn't see it? Did it, right? You'll go through each component to see where were you wrong so that you can improve your market posture? Or did you see it but not make adjustments quickly enough or big enough? In order for us to make those assessments, we need to understand our posture leading up to the trade and understand our perception of conditions and sentiment. Then we need to evaluate the impact of our market evaluation on the trade. Did our market posture help us or hurt us? That's important. When I go through that assessment, I'm able to very easily say it helps me. I can quantify it. I can show specific instances. You need to be able to do the same. And if not, then you need to improve your market evaluation. This is telling us, where do we need to make improvements? We have that quest for marginal improvements. Well, here's one. Usually we can find market conditions. Okay, next, rule adherence. Did you follow the rules? Review your adherence to the trading plan. Did you follow the predefined rules for setup, for trigger, for initial stop, for target, for time frame, for adjusting stops, for taking profits, for selling manually if things go wrong? Were you watching the things you were supposed to watch? Did you change your charts at the right time? right? All those rules are defined in section 3. So when it's time, you go look at section 3 and you say, did I do these things for this trade? Was this set up in place? And you might be like, oh gosh, you know what? I actually anticipated this trade a little bit. Is that a broken rule? Well, it depends. What was your posture at the time? Was your posture iffy and then you anticipated? Well, there you go. That might be something that you would say, you know what? That might be on me. And then you start to make rules where you say, I don't anticipate when my market posture is in a certain place. Well, we don't know. We're just open. We're open to the observations that this can help us to get the information necessary to make improvements. Now, then we have to address any deviations in their impact. And that gets hard. And like I said, I've had times where the top 3 mistakes I made cost me 8%. Probably even more than that. I'd have to go back and look. I've blocked it out. Right? Where you're like, okay, here's my 3 mistakes, my 3 worst mistakes. What did it do to me? Sometimes you'll make a mistake, no harm, no foul. You're just like, oh, okay, no big deal. Other times, it can really have a significant impact. So we have to be prepared to understand what was the subsequent impact on the trade and emphasize the importance of disciplined execution. If you're going to build this framework and this structure, trust the process, trust the rules. Next component that you want to evaluate is your risk management. How did you do? How did your stop losses? Well, number one, did you achieve your risk goal? Meaning, what was your max loss and what was the loss you took if it was a loss? If your max loss is 500 and you lost 450, yeah, you're going to be like, okay, that one, I'd like my loss to be 80% or less, 50% or less. The closer you are to max loss, the more it's like, okay, that thing got away from you. Max loss means, yeah, when you get in your car, you put your seatbelt on, right? But you try to hit your brakes. You don't just think, oh, you know what? I've got my seatbelt on. The fact is you don't want to have to use your seatbelt. You want to hit the brakes, jerk the wheel, something, avoid it. Same thing in trading. That's something that we can learn from right there. We're going to evaluate our stop loss placement and effectiveness. Did you have a stop? Should you have had a stop? If you did you change it? Did you move it? Did you adjust it? Did it get hit? When it did, was it good? Was it bad? Right? All those, anything about the stop loss. What can you learn about what you did? Sometimes what you learn is market specific, where you say, hey, you know what? In this market, I felt like I needed to be a little tighter and that worked out. Or I needed to be a little looser. And that was probably the wrong decision. Be open to the data. That's what I'm saying to you. Data-driven decisions. Risk to reward. Review what it was, what your expectations were, and review what you actually achieved. And if there was a significant differentiation, why? If the trade reached your goal, you should definitely have achieved it. If you didn't, why? Things like that. Now, the last thing you want to evaluate is any adjustments made during the trade. Did you tighten a stop? When? Was that according to plan? Right? Did you take profits? When? Was it according to plan? You want to, and not again, this is not about like hindsight bias, like, oh, I took profit and it went higher. Yeah, that happens. You got to be ready for that. Now, if it happens over and over and over again, then you should be taking profit longer, waiting longer. That's an adjustment. That's an improvement. Those are the things that we're looking for, but we got to go get the data. It's not going to present itself to us. If we do good record keeping, a lot of data will present itself to us in the record keeping, right? In the analytics. But the devil is in the details. You got to get granular. You got to jump into the trade, roll up your sleeves, get your hands dirty, and really give it a post-mortem, right? You're exhuming the trade. Okay. Overall trade assessment. Make sure that you do an aggregate analysis of post-trade components, right? You're going to look at all the components and say, okay, overall, how did I do? Overall. A consolidated review, various post-trade elements, synthesizing insights from trade outcomes, emotional analysis, other critical components. You want to have that holistic understanding of that trade's overall performance. Is this a lot of work? Yeah, probably going to take you 20, 30 minutes for a trade. So you can't do it all the time. That's what I'm saying. And you're going to get faster and better to where you're like, you know what, maybe I can do it in 5 to 7 minutes. Create yourself a format for it. Create a spreadsheet where you can keep track of it. It's your record keeping, it's your structure. Think about that, right? Trade outcome. Explore the financial dimensions of the trade. Your profit loss analysis, your percent return. Evaluate it compared to potential benchmark comparisons from previous analysis. How does it compare to the last 25 trades? Is it bigger than your average win? Great. Is it smaller than your average loss? Great. Those are helpful things for you to be able to say, how am I doing? Right? We want a lot of different ways to be able to see it, because you never know when that pattern might show up where you're like, wow, that was insightful. It's a foundational step in refining your trading strategies and optimizing future performance. Lastly, you want to make sure that you analyze the emotions. Yeah, this is all about ensuring the professor stays at the computer. But we also have to assess, did the chimp get out of the cage? And if so, what was the impact? We got to be willing to address that, look in the mirror and understand the emotional aspects of the trade, shedding light on how our sentiments influence our decision-making. We need to address emotional responses in order to better cultivate discipline, make better decisions going down in subsequent trades. Okay, man, you know what? This may be, it's Thanksgiving, a time for miracles. A time for miracles at Thanksgiving. I may actually wrap up in less than 45 minutes. Okay. Lessons learned. Bruce Lee, a hero of mine, wrote a book, The Tao of Jeet Kune Do. In this book, he talks about how you can improve anything. Systems, kung fu, trading, cooking, the way you raise animals. I say that because my dog just walked in and decided it's almost dinner time. Okay. So let's have some key takeaways. What worked well? So that's what Bruce said. This is directly from Bruce. What worked? Well, he says, in any system, find what's working and keep doing it. Find what's not working and get rid of it, and add what is uniquely your own. What worked well? What contributed to success so you can keep doing it? Understanding that helps replicate positive outcomes. Areas for improvement. What can we do better, or what can we get rid of? Reflect on aspects that can be enhanced, refined, or removed. Identifying areas for improvement is crucial for continuous growth and the development of a more robust trading strategy. Any observations of pre-patterns, meaning, you're just going to be like, oh, there's a pattern. It's one trade. But if you're like, I wonder if this element, this characteristic, I wonder if this happens more regularly. And you'll be like, I'm going to write this down. And you might have a little list of pre-patterns where you're like, there's 4 or 5 little, I wonder if I could lose less I wonder if I could make more I wonder if I could, improve my stop losses It's the scientific method. What are you doing? Making observations, coming up with a hypothesis. Hypothesis has to have actionable steps. You put those actionable steps into practice. You watch the numbers and you do record keeping and make observations. And if the numbers get better, you say, hey, you know what? That worked. Let's keep doing it. You know what? That didn't work. Let's get rid of it. You know what? I think if we did this instead, right? Focus on strength. Remove weaknesses. Add what is uniquely your own. That's all we're doing. We're doing it systematically, one trade at a time. Every single loss, a good number of winners. What else? Aggregating for adjustments. Aggregation. The aggregation of marginal improvements. Understand that the power of small continuous improvements, when aggregated over time, lead to overall progress. We're not trying to be like, you know what, I'm going to change. It's not like you're going to make these sweeping, maybe at the beginning, sweeping changes. Because a lot of times people come in and they're just like all over the place. And then you quickly find this path. And then as soon as you're on this path for a while, you've made a few passes at your trading plan. You've got your record keeping. You're like, yes, this feels like a business. This doesn't feel like a hobby. If it feels like a hobby, something's wrong. I promise. It feels like a business. And now, right, you can see that it's just little adjustments. You're not making huge sweeping changes. You're tweaking a little here, you're tweaking a little there, a little longer, a little tighter, a little sooner. And you have a cumulative effect that transforms your process, your approach, yourself, your outcomes. Do not throw spaghetti at the wall. We don't take haphazard or random actions. Oh, you know what? Let's try this. We are surgical. We are surgical in our adjustments. That's the adjective. That's the word. Surgical, thoughtful, strategic, fine-tuned, precise. Precision and intentionality. Beautiful word. Beautiful word. Thank you, generative AI. Always helpful. Intentionality in decision-making. Each strategy should be purposeful, contributing to this well-defined, this well-oiled machine. We build it, we turn it on, we manage it, we run it. It is a representation of us. Every adjustment you make should be very specific. It should be a specific course of action with a specific objective in mind. Anything less than that, don't do it. And don't forget, we cannot improve what we cannot measure. Embrace the importance of metrics and quantifiable data in our improvement process. Without proper measurement, it becomes challenging to identify areas for enhancement, to track changes. We must use clear metrics. We must use clear rules. We must clearly identify each component in ways that we can assess them. Once we are now doing our post-mortem, our post-trade assessment. Very, very important. Look at that. First time ever I am giving a full 10 minutes, or else I may give you a few minutes back and we'll have a little easier recording. What are your questions? I don't have a spreadsheet for this. This is a tough one because so many people do it so many different ways. But I would say find a way, whether it's a Word document, whether it's an Excel spreadsheet, some way for you. Maybe you take a picture of the chart of the trade, and then below it, you create categories, and it's a full page in the beginning. Whatever you do, 6 months from now, it's probably going to be less. A year from now, even less than that. 5 years from now, it won't be a lot. And you'll be like, I really got to force myself to go back and do this again. Because I promise at that point, you've gotten complacent. I've been there probably a couple of times. Right? You work hard, you push, you improve. And then all of a sudden, you look around and you're like, oh, damn it. I'm the frog in the water. I let myself get complacent and things deteriorated around me. Maybe not to the point of death, but to the point that you're not happy that you let yourself get complacent. This process that we're putting into place is it's entirely to prevent that, to prevent ambiguity, to prevent complacency, to promote discipline, to promote consistency, to promote accountability, to promote improvement. Yes. Are you inspired? I hope so. Because I'm going to leave you with this. There's no questions coming in. Sandra's already wished everybody a happy Thanksgiving. My bird is sitting in a brine, a beautiful brine of apple cider and beer, kosher salt, some sugar, some cinnamon, some cloves, some peppercorns, a little garlic. Oh, it's going to be magnificent. It will smoke for a while. Oh, I cannot wait. It's going to be the best bird yet. Anyways, I digress. Yes. My challenge to you is to embrace this process. It doesn't have to be. It feels like a lot, but I promise that if you spend the time to break it down into routines, and you could do this in the beginning 2 hours a day. It's 14 hours a week. That's a part-time job. When you're just trading and you're not developing a lot of things, when you've gotten this thing down, it's an hour a day, right? Maybe a couple on the weekend. This doesn't have to consume you. If you want to be a day trader, great, be a day trader. Obviously, it's going to be a lot more time than that, but it doesn't have to consume you, and you can do everything. You can accomplish all of this, and it can significantly change your financial life. I believe that. I hope you believe that. I hope that's why you're with us. I hope those of you listening at home will join us next week for the wrap up. We're going to do like I said, case studies, a bullish trade and a bearish trade, one of each, calls and puts. We're going to go into the options. We'll talk about both stock and options. I'll actually even go call, put, and tell you the spreads, but I won't build the spreads, only tell you about them. And then on Thursday, our final foundations wrap up and Q&A. Then we'll shelf it for a month, and then we'll switch gears and go into the options foundation class. Yes, the rest of the week we're still meeting. So tomorrow morning, market's open, we're open. Regular time, pre-market, 15 before we open. We'll do our weekly check-in. Friday, however, whatever your normal time is, subtract 3 hours. Friday is closing at 1 p.m. Eastern instead of 4 p.m. Eastern. So we're meeting at 12:15 p.m. Eastern instead of 3 p.m. Eastern. For me, it's 10:15 a.m. So there you go. And then I'm going Black Friday shopping with my kids, hopefully. At least one of them. Maybe the boy will go with me. The girl probably not. All right. So I hope everybody has that. I will send an email out with a reminder about that. Thank you very much, Perry. Appreciate it. Happy Thanksgiving. Happy Thanksgiving, everybody. It's good to see you all. As always, I hope you have a wonderful Thanksgiving, wonderful rest of your week. If you don't join me, I hope to see you tomorrow. But remember, no Thursday Foundations course this week. All right. Thanks as always. Happy trading.